Welcome to Real Estate 360 Live with Ryan Sloper, the trusted name in real estate radio. Now, here's Ryan Sloper.
Welcome, everyone, to another episode of Real Estate 360 Live. I'm your host, Ryan Sloper. For those of you not familiar with the podcast, my guest and I will do a podcast each and every week on all things real estate, from interest rates to the economy to what's happening in Washington, the Federal Reserve. Obviously, we've got, major events taking place. We have Ebola, we have Russia, we have ISIS, we have all these things, and we kind of tie them back into, how that affects real estate and the economy. There's not many shows out there that actually, dive deeper into the more macro events that are taking place. But I think it's critical to understand those things. I mean, many people, all they pay attention to are existing home sales going up, are new home sales going up or down, what are mortgage interest rates doing. We do talk a lot about those things, but it is important that, one understands why things are taking place and what potential implications of these macro events that are taking place, how they affect real estate. Many people have been writing in lately and wondering why things are so stale in the real estate markets. We're going to dive deeper into that today. We have obviously a lot of topics to cover, a lot of ground to cover. Bullard, one of the Fed members, Bullard, came out and basically made the comments that he believes that QE4 should potentially continue and that they shouldn't end the program come, this month. Not a surprise to me by any stretch of the imagination, but I think we will definitely touch on that. We're going to touch on low interest rates. Mortgage interest rates have shot down to extremely low levels right now. We'll talk about what that means. Joining me on our panel, as he does each and every week, discuss the many topics, is Louis Camerosano. Louis is a former attorney, a former general manager of a major real estate portal. He's been cited in the media as a real estate industry expert in Forbes, Wall Street Journal, Fox Business, U.S. News, MSN, and numerous others. Louis, how you doing today?
Doing grand, Ryan. How are you?
I'm doing well, sir. So, obviously, the top of the show, we have to kind of dive right into it, because when we talked last week about the Fed and pretty much trying to nail down what was going to be their next move, well, look what happened. The stock market started going backwards, and lo and behold, Bullard pops his head up and basically says that the central bank should, consider delaying the end of the Treasury and mortgage-backed security program. Now, it's no coincidence that any time that you get a bunch of negative days in the stock market, that one of these talking Fed heads shows up, right? And they come out with comments, and I believe he even tried to pull back his comments just a little while later, because everybody, I think, was like, whoa, I thought you said last month that it looked like that, everything was okay, right? And so he's like, well, I do think that, everything seems to be moving in the right direction, but now I'm worried about the whole inflation thing. It looks like we're moving in the other direction, and it's going to be really data dependent. So they can double talk all over the place to completely confuse people, and this is mainly what it's there for, is to confuse people. But we know, though, what ultimately happens anytime they start talking about continuing the program. That is the impetus to all the market needs to drive stock market right back up higher, right? This is what happens. We see it with the ECB. ECB now came out and said that they plan on basically buying more assets. Well, is it any surprise that this is the only move that any of the central banks have to go to, right? And it's completely a timing play. Whenever the stock market starts moving backwards, what do you think the headline is today on CNN Money, Louis? U.S. markets set to bounce at open after a tough week. Stocks are poised for a rebound. Yeah, because you know what? It's just too tough out there for the stock market to go negative, Louis. It can't happen. It can't. So what do? We just had one of the Fed, the Fed board members come out and just start saying, it looks like, we might have to start going in the other direction again. Turn the printing press back on. Hold up. I want to get your take as to Bullard's comments. Obviously, we honestly have been predicting this stuff almost spot on, Louis. And, if we can see this and nobody else really cares. I mean, because the stock market's just going to rally behind them. Where are we headed from here? I mean, it's comical, right?
It is totally comical. What the market does is they take the Fed's comments at face value. And that may appear to be stupid. You say, well, don't they know any better? They probably do. But everyone trades on what the Fed says as if what they're saying is true. They're not going to second-guess them. They're not going to say, well, they don't really mean that. We know QE4 is coming. They act as if whatever the Fed says at the moment is true, and they trade accordingly. Now, you mentioned Bullard. Now, he's ridiculous because he was saying just on October 9th everything was fine. I have no worries. And then, the stock market goes down, and he says, oh, wait a minute. We shouldn't stop QE. We should keep QE going. And he's talking out of both sides of his mouth. And just today, to kind of downplay Bullard's comments, they trot out this guy. You don't really hear very much from Eric Rosengren from the Boston Federal Reserve. He's on Squawk Box. They bring him on there, and he's like, well, it's a little too early to talk about making adjustments to QE. But what they've done, Ryan, is they have reintroduced the idea into the market that QE4, or QE continuation 3, is a possibility. Whereas before, what they were the narrative was, is when are they going to raise rates? Okay, and we talked about this 3 weeks ago. We saw the comments where they were already pulling back from when they might raise rates. I mean, you have to do that first. You have to pull back you can't go from raising rates in the first quarter of 2015, as Bullard had said he was planning on, to all of a sudden flipping over to, we're going to continue QE, we're going to do more QE. So they have to kind of ease into this. But, Ryan, you're right. We talked about this 3 weeks ago, and we outlined before the FOMC minutes came out that the Fed was already backpedaling on the idea that they were going to raise rates, but the market didn't see that. They were worried that the Fed was going to raise rates, even though they had been trotting out the Fed presidents talking about worrying about a global slowdown that could push back the rate hike. That's what Fed Vice Chair said October 10th. Plosser said, even Plosser, who's a hawk, said everything is data dependent. We talked about there was a danger zone that came out on October 10th. You see, they ease you into this. Bloomberg was talking the Fed needs a clear strategy for getting the inflation rate higher. We talked about how Dudley and Contra-Lakota were worried that they weren't going to meet their inflation target. So they were all worried about these things happening. They were worried about the dollar rising and interfering with their inflation. Evans was talking about that on October 11th. Stronger dollar, weak global inflation are putting downward pressure on the pace of price increases. So now the real worry they try to put in your head is, oh my goodness, we're going to have deflation. We're troubled by this soft inflation. We're going to have deflation. What are we going to do about this? The dollar is too strong. And now you're almost begging them to act. Oh yeah, we can't have that. We're going to need to get another round of QE going. There's no chance that the Fed will hit its 2% rate target by the end of the decade. This is in Bloomberg what they're saying. So all of the Fed presidents had come out in the last 2 to 3 weeks talking about their concerns about the economy, other than Bullard, who was saying everything was fine. He was open. They could raise rates in the first quarter of 2015, even though some of his colleagues are talking about waiting to 2016. But then they ease you into it, because then you remember Fed President Williams, and this is what's interesting. Williams, Ryan, the San Francisco Fed president, talked out of both sides of his mouth, and we covered this in the show last week about how the Fed could raise rates more quickly if the economy starts to overheat. They could sell assets. But then again, if the economy slows, they could delay raising rates and so on. So he was kind of going through the whole as data-driven. But he actually, before Bullard, and this is what's interesting, before Bullard came out with his blatant statement on the 16th to Bloomberg, Williams had said exactly the same thing on the 14th to Reuters. But the headline didn't say anything about QE. The headline Reuters puts out, this is how they kind of ease you into it, said, exclusive, Fed Williams downplays global risk, eyes U.S. inflation. Okay. And the way the story reads, and here's how they slip it in there. A bellwether Federal Reserve policymaker on Tuesday downplayed concerns about weakness in the global economy, which means they're not talking about QE. everything is fine, just like Bullard was saying. We've got things under control, saying the U.S. central bank should only delay an interest rate hike next year if inflation or wages fail to perk up. So they're still talking about the raising rates. It just might be delayed, but it probably won't be delayed because he's downplaying the concerns about weakness in the economy. Then it goes on to say in the second paragraph, it doesn't say anything about QE yet. It says, John Williams, president of the San Francisco Fed, said in an interview with Reuters that the first line of defense of the central bank, if needed, would be to telegraph that U.S. rates would stay near zero for longer than the mid-2015 period when they expected them to raise. But then in the third paragraph, this is where they slip it in. If the outlook changes significantly with inflation showing little sign of returning to the central bank's 2% target, he said he would be open to another round of asset purchases. Now, that should be the headline. That he basically said, hey, I'm willing to do QE. He went on to then praise QE and say the purchases were successful in helping to extricate the economy from the 2007 to 2009 recession. To your point, Ryan, hey, it always works. This is what gets people going. Why not go back to it again? And then he said, and this is the quote, if we really get a sustained disinflationary forecast, which is what we've been hearing, then I think we should move back to additional asset purchases in a situation like that should be something we should seriously consider. I would have no trepidation about reversing course and returning rates to zero. Okay, and then you finally wait 2 more days, and then you get Bullard, who says, QE could last longer than October, and then what happens, lo and behold, as you point out, the headlines is Bullard Fed could delay QE's end, stocks rebound, mission accomplished, correct?
Correct. And you know what's interesting about this? What other data came out yesterday? And this is how masterful these people are, okay? We get a reading on initial weekly jobless claims, which is 264,000 versus the 290,000, which is a huge deal. Like normally, that would be like astronomical movements in the stock market and the bond market. It really, what happened was mortgage-backed securities, the 10-year note at one point was down to, I believe, like 1.84. And what happens is jobless claims come in better than expected, so all of a sudden it reverses course, okay? Because you can't have that 1.84 down to like 1.6, so it evens it back out. So that reading comes out before Bullard opens his mouth, okay? So now he can say, look, looks like it appears the economy's moving okay, but I don't like this, the disinflation that's potentially taking place here. So they can start to pin all this stuff now on not having enough inflation. And it has nothing to do with the economy anymore. It has nothing to do with the economy. Just like we talked about, Louis, how they just decide that they want to, take all the focus off something. Like, we don't want to focus on real estate anymore. Now we're going to focus at all on the employment situation. Now it's just the inflation. And how everybody's now going to buy into this crap about it's just inflation so they can turn around and come out with QE4, okay? Because that's exactly what's taking place. And anybody that sees it otherwise is crazy. Because this is exactly
what about those job numbers? I mean, they were touting them to the high heavens. They were the lowest initial jobless claims in 14 years, as if they're trying to say the economy hasn't been this good in 14 years. Everyone knows that's not true. In fact, the market didn't react to that because people even know that the Fed has discounted those numbers because there's just too much noise out there, not noise, but actual reality and logic, that people know that the decline in initial jobless claims does not give an accurate reflection of the health of the job market, nor does the non-farm payroll, because people know that the non-farm payroll is stuffed with part-time jobs, and they know that the initial jobless claims are down just because more people are leaving the labor force and there's fewer people left to fire. So now they realize that those numbers don't give the bang that they want, so they flip it back and they say, you know what works? Well, it always works. Well, it works 100% of the time, and the markets are addicted to, and when you give it to them, they respond, and that's, say, QE. Asset purchase, buying, that doesn't work as well. I guess that's why when Williams spoke and he talked about making asset purchases, he didn't talk about QE. Bullard hit the right note when he said we could continue QE.
Yeah, and let's just bring this back to real estate, okay? Because this is all part of their plan too, guys. Don't think that even though real estate has become back page news, the word on the street is that real estate is really in big trouble because all all the agents that I see, if you read on Facebook, if you read anywhere in these private forums, they're all saying, I've got my house, a house that's priced right, and I'm not getting any traffic through for the first 2 weeks. There's not enough buyers out there. There's more inventory coming to market. So what's the thing that the Fed can do in order to try and promote, temporary spikes in real estate sales?
Lower rates, maybe that will work. It doesn't work. You can lower rates to zero. People need jobs and money to buy houses, and they need to be able to get a mortgage.
Right, but do you know what will work though, Louis? If they can get them to to come down from let's just say 4 to back into the 3.5% temporarily, they will get a month-over-month increase because you're probably going to get some of the people that have money to be able to potentially go and buy another house, right?
Maybe they want to get the investors back in the market.
Well, what I think is that they're starting to see prices shift back downward, and the way that they want them to level off at least. And the only way they can keep them level is to have the interest rates move back a little bit more. They're doing
Ryan, they're not leveling. I've been tracking houses that came on the market in June. I'm tracking about 10 houses in my area, and they have all undergone between 3 and 4 price cuts right up until October, and averaging about 7 to 12% in price cuts. Price reductions, and they're not selling.
They're not selling, and you know what the rhetoric is going to be from NAR, from all the other big. It's never been a better time than now to buy, right?
Well, mortgage applications were down, Ryan, but you still see CNBC pumping and spinning the facts that mortgage applications were down. Refis are down 27% from last year. Home purchase applications were down from the month before. Yet they spice up the story with words like mortgage applications surged. They jumped to their highest level since who knows, whatever week it was. And they had the headline, there's a refinancing boomlet going on. I mean, this is ridiculous. I mean, the numbers aren't even good because they were better than 2 weeks ago or something. They're talking about a refi boomlet happening when they're down 27% year over year, which last year they weren't that good either. So you got no mortgage application, you have no new home sales, but you have fewer new home sales, fewer existing home sales, you have flattening home prices, and they're clinging to this concept of a housing recovery even though there isn't one and interest rates are at an all-time low. So if you have interest rates at an all-time low, and as you say, Ryan, if that's not driving people out to buy houses, what will? Well, obviously not low interest rates and QE, but jobs and wage growth and a properly functioning economy.
Yeah, we talk about this all the time, Louis, about these real estate gurus or real estate agents always pumping that it's always a good time to buy, right? And that's the one thing that I never do, you'll never do, is that, we're never just going to pump the market just because that's what everybody else is doing. We say that the best time to buy, if you're willing and able, and you can take advantage of low interest rate environment to protect yourself from the future inflation, then obviously you'd want to do that, right? Who wouldn't want to take advantage of interest rates that are 4% or lower? Correct?
Correct.
If you're,
and
if
who
you're
wouldn't want to own a house? I mean, most people do want to own a house.
Right. So now
at the right price.
Correct. Now let's just take that out of the equation. Let's not worry about whether home prices are going to go up or down for the next 30 years, right? Because see, this is where everybody I think really misses the boat. It's a sound investment to buy a house in a low interest rate environment. If you can fix in your costs for a 30-year period at a low interest rate, regardless of what your home price does. Now, what the Fed doesn't want is they don't really want values moving backwards. Okay, that creates a negative consumer sentiment out there. It's the same with the stock market. They don't want the stock market moving backwards because guess what? Then everybody's going to get scared and think that everything's crashing. We have such an artificial market where they want real estate to be high, they want the stock market to be high, but guess what? There's no underlying fundamentals, guys.
Without any underlying increase in the production or profits of the company, and home prices going up, Brian, it's the same house. Why does it go up? Just because they manipulate the price higher, not because anything happened that the house is more valuable or is producing more income. It's not.
And, it's comical because if we have interest rates going down, we have the 10-year that dips down to 1.84, the floodgates would open for the amount of people that would want to refinance right now. But unfortunately, the biggest...
There's a boomlet going on, Ryan.
And then...
According to CNBC.
Well, we have this, initial jobless claims number that's the best since April of 2000 and handily beat the market expectations, right? But the truth of the story is that they don't go in to tell you the details of those jobless claims. They don't tell you that the jobs that are out there are part-time jobs.
Because it would run away from their narrative that somehow everything is wonderful. If you go into the job, I saw something that, in the non-farm payroll that showed 80 to 90% of the jobs went to people over 55 years old. Now, that's not healthy. 230,000 of the jobs are added in the 55 to 69 age group. That's a sign of a horrible economy because it means older people can't retire. Older people, because they can't make money on their savings because of the low interest rates, that they're into the job market. They're either postponing retirement, coming back into retirement, and they're taking away, in many cases, entry-level jobs at supermarkets and Home Depot from younger people who would use those jobs as a first-time job. They don't mention this. They just mention the top-line number. A lot of jobs are created. They don't mention they're part-time, low-paying, and most of them are going to people who traditionally should be out of the workforce. Think about this, Ryan. If the labor participation rate is low, but you have older people participating, senior citizens in the market more than before, they're the ones getting most of the jobs, that means the labor participation rate of the people in their prime earning years is even lower because they're not getting the jobs they need. Now, how are they going to buy houses? Senior citizens to go out and buy houses. They couldn't even on the jobs that they're getting, according to the statistics. But you're right, Ryan. That's what they report, that this is a great labor market, health in the labor market, strength in the labor market. They keep talking about that. And in fact, CNBC says there's something like, because of the initial jobless claims being down, this pointed to perhaps maybe, the Fed will have to raise rates earlier because we have this booming labor market. You couldn't have anything more completely opposite than the truth.
Right. It's very apparent that if we had a booming economy, if we had jobs that were being created, we'd have a booming housing market right now. We don't. Home
sales are down to the levels of the 50s and 60s when we had, 40 to 50% less population.
So what other number do you need to look at? You have a low interest rate environment. If you had a great job situation, we wouldn't even be talking about this home situation, Louis. It would be
better than mourning in America.
Absolutely. I mean, this is a no-brainer. But the fact that they have to keep bringing it up, the fact that they have to flip stories around to say, you know what, we have this great low interest rate environment, but the millennials are jaded because their parents got their houses taken away from them, right? And they don't want to buy now because their parents had bad experiences and they'd rather rent. Now,
okay, maybe that's part of it, but the bigger part of it is they don't have a job or they have a part-time job and they got student loan debt. Yeah, they can say that's a reason not to buy one, but that's irrelevant if they can't buy one anyway.
Yeah, and you brought up.
That's like saying I don't want to play baseball for the Yankees because I don't like to fly. Well, they're not going to hire me to play baseball anyway.
Right. I mean, what was the other number that came out the other day? It was home builder sentiment, okay? It came in lighter than expected, 56 versus 59. Well, you really think that the home builders are thrilled about what's taking place right now? Because I guarantee you, if you talk to some of the people, some of the top, upper echelon at these new home builders, they're scared, okay? They're scared for what's taking place because when they can't unload brand new homes at the interest rate environment that we're in right now, and they've already basically started building out these subdivisions, because remember, when we came out of the bust cycle, when everybody had like land that they were sitting on, these new home builders basically will sit on land until it gets to a point where they can make profit, right? So they won't start building until they can make a profit. But once you start that subdivision, it's very hard to just shut it down.
Correct.
Right? Like, you got to build through it. Well, what's happening is that, they typically roll these, they have loans that roll from one house to the next, but when these, houses don't sell or somebody puts a deposit down on a house, but then their financing falls through and now that house is there, these loans stack up, then they're stuck. They can't continue to build out the rest of the subdivision. And
who do you blame for this, Ryan? You have to blame the Federal Reserve and the media, because the reason that these home builders are buying homes and pricing them high, because they've been sent a signal that there's a housing inventory shortage. If you build them, they will come. Prices are rising. The demand is there. And so they go out, they build the houses, they price them too high, and then they sit there.
Yep.
And that's classic malinvestment that is a result of artificially low interest rates. because I see it in my area. I mentioned that I was tracking 10 to 12 homes and their price reductions. What's interesting about all those homes are there are homes, new homes, that are smaller in size with smaller lot sizes that are being built or are built and on the market that are priced significantly higher than the ones that I'm following.
Yep.
Now, those home builders don't have any chance of selling those homes at those prices. They don't even have chances of selling the homes at the initial selling price that the used homes, the existing homes, were originally listed at. Now, that's going to be a problem. I mean, do they bulldoze the homes? Do they offer reductions on the homes? What happens? Because if the existing homes aren't selling and they're priced 20 to 30% lower for more square footage and more acreage, how are they going to sell those homes? I understand you get a premium, and you see it in your area. You know, you get a premium for your new home. You see it in the nationwide statistics. Between, I think it's $230,000 is the average existing home price, and it goes up to almost $300,000 for the new homes. But that premium isn't going to exist it can exist, but the existing home sales price come down. They've got to come down with it. But Ryan, you would know about this more than I would, but their financing is dependent upon them selling the homes at the higher price.
Yeah. Yep. Yeah.
So how does that? So what happens next?
Well, you're talking about like if the person that's buying the new home, they've got to sell their other one, right?
No, what I'm talking about is if the home builder's gone out and he has that land that you talked about where he's sitting on, and he goes out and he puts the houses up at $700,000.
Right.
He's kind of built his finances around selling those first few houses and building more on getting $700,000.
Right. Yep.
He doesn't really have the option to go down to $500,000, even if the market, because then he can't pay his loan back.
Yeah, I mean, I think what happens is that they start building knowing what their margin has to be. Now, it gets to a situation, and this is what happened the last time, where sometimes the only thing that there is left to do is cut their losses, right? Which unfortunately means that these companies are not going to be profitable again, which is what nobody wants to hear. And so, last year I was still seeing, like in my area, the DC metro area, Northern Virginia, it was, pretty low inventory. Like, now I've seen the increase of inventory stuff is sitting on the market. So as soon as stuff starts sitting on the market, resale, okay, that sends a clear signal to them new home builders that, what do we do, right? Like, we like that low, resale inventory environment, because what happens is that drives everybody to them. But once the resale inventory picks back up and then they start price dropping, that means that the builders pretty much have to follow in lockstep with everybody else. They don't want to do that. So what do? They either their houses sit on the market for 6 months to a year and sell one or two at a time, you know what I mean? Which is not, once again, not a healthy environment. But they're not going to have a choice, because the way a lot of those loans are set up, they have to be paid off in a certain amount of time.
Right.
And so what they're going to do is they're going to end up having to cut their losses, lower their prices down, and either make lower margins or no margin at all.
Exactly. And I saw, remember in Southern Cal, they were bulldozing some of the houses. They just realized it wasn't worth keeping up the maintenance and paying the property taxes. They weren't going to sell them at a price that they could make money on.
Yeah, exactly. And, I think what has some people so confused is because people have been conditioned by the Fed, by the media, by the president, by everybody, that, guys, it's okay. Look, we're moving in the right direction. Jobless claims are down. Interest rates are low. Stock market is
higher.
Right. There's nothing.
Well, it went down for a few days, but we'll fix that. We'll just talk about QE.
Yeah, it's interesting because the other day you talked about that insurance letter that you got in the mail. That congratulations that you you still have insurance, but it just went up by who knows how much. Well, but I can keep it but I can keep it, and all I have to do is nothing. They will just take more money out of my bank account each month automatically. So there's good news. I can keep my insurance policy. I can pay more, and they'll do it automatically. Nothing to worry about. Yeah, well, so it was funny you said that, because I was like, how come I haven't received that letter in the mail yet, right? Well, right behind it last week, I got that letter in the mail. So I want to be completely transparent with all the listeners so that they can get an idea of what we're working with here. So I have an individual plan for myself, and then my wife has the family plan with her and the kids on a separate one, okay? And we did that because my insurance premium on my single policy was so cheap that it didn't make sense to add me to the family plan, and it drove it up like $300 or $400 more. So I kept my individual plan, which was $130 a month for an 80-20 plan, Okay?
That's nice.
Yeah, it was very nice. Okay, it started at $89 a month a long time ago. Obviously, I'm very low risk. I meet all the, very rarely go to the doctor. $130, got that letter in the mail, as you did, saying, congratulations, we're still going to insure you. If you'd like to keep that same plan, it's now going to be $380 a month.
Bingo.
Okay? Now.
Yeah.
Okay, so I'm like, oh, crap. I'm like, my wife's getting ready to get that same letter on the family plan. What's going to happen on that? Okay, so the family plan, so I give you basically $130 to $380. Now, the family plan with her and my two kids is about $630 right now.
Oh, that'll be close to $1,000.
Yeah, well, her letter hasn't come in the mail yet. Okay, right. So we don't know what that one's going to be. But let's just assume that goes up to $1,000. Now we're at almost $1,400. We're at a mortgage payment for our insurance. Okay?
Right.
And you have to remember that we're paying this separate because I'm self-employed and paying this out of pocket, so this is basically post-tax money that I'm having to pay. So that's essentially like paying $1,700 or $1,800. Okay?
Right, because you get no tax deduction on your insurance payments.
Correct. So now I'm thinking, hold on. And now we've got almost like $20,000 in premiums going out. We have a $2,500 deductible at a minimum, okay, before they even start paying the 80/20. So we're now almost up to $25,000. Why in the hell do I not just not pay insurance? Okay.
Oh, Ryan, just quickly give you mine. Mine is the deductible. I think is $7,000 or $8,000. Family of four. It was about $900, and they sent me the good news that it was going to $1,000 a month. That's $12,000 a year that you got to pay. How can you afford, to as you say, to get a mortgage? I mean, you already owe that money, and if you don't pay it, the interesting thing is the way they passed the Obamacare to make it constitutional was they had to say it was a tax. Now, the legislation says it's not a tax, but in order to get it passed, Justice Roberts had to create some legal fiction that it is a tax, and that because the penalty for not paying wasn't that great, this is not good legal logic, but that was the rationale, that therefore it was constitutional. But because of that, the penalty that you have to pay for not having insurance is far less than actually buying the insurance. And the loophole there is, and I don't know why more people don't do it. I mean, you and I aren't doing it because it just sounds disingenuous and it sounds fraudulent. But if you don't pay your insurance premiums and you don't have insurance premium as mandated by Obamacare, you have to pay a penalty. Okay, but the penalty is far less than taking the insurance. And if you do need insurance, it's cheaper just to go to the doctor out of pocket. But if you have something that costs more, that would be, where you'd want to have insurance, not a problem because Obamacare allows you to not be denied for pre-existing conditions. So then you just apply for insurance if you see that you're going to have a bill that's going to be bigger than what you'd have to pay out of pocket. Absolutely.
Yeah. And you know what? Think about this now. So I said that to set the stage for this. So now basically let's just say that I'm going to be paying $25,000 a year, which is about $2,000 a month. Okay? Now, when people are going to qualify for a mortgage to buy a house, did you know, Louis, that your health insurance premiums aren't even taken into consideration as a debt? Did you know that? Because it doesn't show up on your credit report as a debt. Guess what? Health insurance. It's an obligation. You have to pay it every month. In fact, you can't pay part of it. You have to pay all of it. But guess what? It's considered a benefit. Okay. So when somebody looks at somebody's paycheck, right, they're using the gross money, not the net. Right. After they pay out their health insurance and all that, that's allowed to be included. So let's just think about this out loud. If all of a sudden your bill, your health insurance is going to shoot up another $500 a month, yeah, you're still probably going to qualify for a higher mortgage amount because it's off the gross money, but you sure as hell can't afford to pay it. Right. Because you can't pay what you could be qualified for. And what's more absurd, Ryan, the GDP goes up the more you pay for insurance. Did you know they include those payments? And your consumer spending goes up too. Absolutely. And they say, hey, consumer spending is up. People's insurance premiums went up, and they paid them. And this goes right back to the point. Everybody thought that this health care thing was going to be great. That's what they voted for. Now these same people that voted for Obama, and now they have this health care coming through, they're like, this is not what I voted for. I don't understand this. Why is my health care premiums going up? Guess what, guys? It's never as it appears, just like everything else. There are all these mirages that are taking place that people just get sucked into and have been conditioned to just go along with. I mean, it's all crap. If you like your plan, you can keep your plan. I mean, how many times did he say that? Oh, yeah.
And you should be run out of office for that. Politics aside, no matter who you are, what your politics are, left or right, if you make a blatant statement like that repeatedly, and then say, I never said it. I mean, come on. Bill Clinton couldn't get away with that.
You know, I always find it interesting because I care less about these articles that the media writes and more about the comments that come from people, right, on the forums and everything else. I'm always reading those because I want to see what people are saying. And if you read the comments, they're all like, this is ridiculous. I can't afford my insurance. It's more than my mortgage payment. And then there will be the random comment in there that will be like, well, it's not all bad. You have insurance. And guess what? I heard if you contact the government, they've been finding these insurance companies if they overcharge you to up when they go to up your premiums. Really? Really? So now they're going to create more regulation where they're going to hammer these insurance companies with fines. Do you think that the insurance companies care to pay these fines? They'll pay them all day long. They'll pay them all day long. It's the same as the credit bureaus. They pay huge settlements, hundreds of millions of dollars every single year, but they're making a lot more money than they're paying out.
Our friends at J.P. Morgan love to pay fines too.
Yeah, that's just the price of doing business. They build that in. Right?
Yeah, and no one else can pay that price, so they can't do business. So it's a barrier to entry. Those are their dues to keep the government-protected monopoly.
Right. So back to the low interest rate environment, Louis, does it matter what interest rates we have right now when you have 300%, 400% increases in health insurance? It sure as hell doesn't.
Nope.
It doesn't.
No job, and these new jobs that they're creating, almost all of them come without insurance. Not only are they taking part-time workers don't get insurance when you hire someone new, but now you're seeing Walmart stripping part-time workers of their existing health insurance. So that means you got to go out of pocket. It's more expensive to buy an individual plan, as you know, than to get one through your employer, even though those are very expensive too.
Right.
That just means even less money if you're working at Walmart or you have two jobs, one at Walmart in the morning and one at Target in the afternoon, and now you have to scramble to buy your own insurance for your family. And now you got to pay $12,000 a year for that. Right. But good news, it's included in the GDP, and consumer spending will go up when you spend that money on insurance.
Absolutely. And as you said, the irony is that everybody can get insurance. But guess what? Nobody wants to really pay it. And I forgot to mention that my last point with the insurance. So my dad is also on an individual plan. He's about, I think, 61 years old or whatever. His plan was something ridiculous as an individual plan, something like $700 a month to start with, okay? Mm-hmm. But guess what? His plan only went up about $80. So what does that mean? Once again, the younger generations are going to subsidize these older generations. So his is already higher to begin with, so they won't increase his as much. They'll take the younger generation and raise theirs up 3 or 4 times to compensate for him.
And they're still paying for Medicare, Medicaid, they're having that stripped out of their paychecks, Social Security, and then they also have to buy health insurance that basically subsidizes older people when they're already subsidizing to having automatic payroll deductions from their paycheck for Social Security and Medicare. Yeah. Of which they receive zero benefit for.
Yeah, you're 100% right. I think, but guess
what? But they should go out and buy a house. And the only reason they don't is they're worried because their parents might have lost their house. Come on.
Right. But do you think that the president, Congress, the Fed, they're going to talk anything about this and what the implications of actually these rising healthcare costs actually means to our economy? What it means to jobs? What it means to buying a house? Of course not, because it makes too much sense. You can't talk about that stuff.
No, that would then undermine the whole confidence in the program. So they'll come up with statistics that say it's not a problem. Employers aren't cutting back. That's just Rush Limbaugh talking. It's funny. I don't even listen to Rush Limbaugh. I don't know anybody who does, but I get accused. People say, oh, you're just a Rush bot. I'm like, what are you talking about? I'm just looking at things from a common sense perspective that when you raise costs on employers, what do you think they're going to do? They're going to try to get out of it. You raise minimum wage, they're going to try not to hire people. You raise insurance premiums and you tell them you don't have to pay insurance on part-time workers. What do you think they're going to do? They'll only hire part-time workers so they don't have to pay the insurance. Yeah,
it's, and it's really stupidity. I mean, our government is basically as stupid as it comes. When you think about 50 to 60% of the jobs are created by the rich. the stupidest thing you can do is raise their healthcare costs through the roof, and then all of a sudden they have to get rid of people. So now if it was 50 to 60%, what if it's only now 30 to 40%? Now you're going to get everybody as independent contractors being hired on a part-time basis or just, where they don't have to worry about anybody's benefits. So,
right.
I mean, as a whole, everybody wonders why the economy is tanking. Yeah, the rich get richer, okay, but that's typically a byproduct of the stock market being propped up and, banks being able to have all these crazy investments with no risk. But that doesn't do anything for the average Joe out there. It doesn't do anything for the average entrepreneur or business owner out there that doesn't have access to capital, that has rising healthcare costs, that would maybe like to buy a house, but they can't because they're paying $2,000 a month in health insurance, which is a mortgage. Right? I mean, but you know what? I don't see any articles written on this stuff. None of it. Everybody's just like, I wonder why houses aren't selling. Well, maybe there's some underlying issues why they're not. Because people are scared. But you know what? They don't want to say they're scared. People never want to come out and say, hey, I'm scared. Like, I feel like I'm my business is slouching off, or, I don't know if I'm going to be able to pay my medical insurance. Nobody's going to talk about that out loud because the media has conditioned everybody to say, look, hey, job market's turning around. Our stock market's higher. But, I always challenge people to ask questions, to dive deeper. And that's pretty much what our show's about, Lewis, is taking all this crap that's put out there and trying and make some sense of it, because it's all crap. It's just a matter of, maybe there's bits and pieces of stuff that's true, but there's
people
always
be convinced that their circumstance is not the reality, but what they read, this garbage, that everything is fine is the reality.
Yeah, and and it's one of those things. It's kind of like, well, everybody else is telling me that they're okay, so I should probably go along with that, right? Like, I'm going to turn the corner at some point. And
the emperor has no clothes. Eventually, someone breaks out and says, this isn't working, and everyone goes, you're right, it's not.
Yeah, and so it's just like we sat here and talked about the insurance part of it. Honestly, sometimes as a family, you might want to sit down and look at things and figure out for yourself if it makes sense for you to be paying these insurance premiums. Now, I'm not telling you what you should or shouldn't do, but that's the conversation that's taking place in my house right now. I can tell you that, right?
Well, Ryan, the only reason I don't do it, it just seems, it makes zero economic sense, and I look at everything from an economic perspective and how I maximize my gains and minimize my losses. Paying health insurance, and I pay it, and basically having an $8,000 deductible and paying $1,000 a year, my medical costs on an annual basis, everyone gets a checkup and maybe gets a cut or a scrape or a bee bite or whatever, the minor things, never comes out to $8,000 a year worth of medical services. So I never get the deductible, so I spend $12,000 a year. And if you find out that the fine, I don't know, what is the fine, $500, $1,200?
It's not. I think it's based upon your income as well. I think there's some calculation.
I don't make that. Okay, I don't make that much, so it's not going to be. It's going to be far less than the $12,000 a year. And then it makes sense that if you did have a medical emergency, you just apply for insurance.
Yep.
That's the way the law is written. I mean, it's not even illegal to. You're not allowed not to have insurance, but the penalty is to pay the fine. If the fine is less than what you pay, then why wouldn't you do that? I'm not doing it, but maybe I need to re-examine that.
Well, I can guarantee you 100%, Lewis, that you're going to see the amount of people that don't have insurance for 2015 is going to go through the roof, right? It's because the people that are currently paying insurance, I'm not talking about the people that were lucky enough to get under and maybe have a cheap policy that were turned down and denied and couldn't get insurance before, but now can get it through Obamacare, and they're happy with paying their premiums. I'm talking about everybody else that's been paying their premiums. Have already had plans and have been paying their premiums for years, have actually had great health, and now all of a sudden your premium goes up by 300 or 400%. Give me a damn break. I mean, it's utterly ridiculous that this could take place, and the fact that it is.
They'd have been better off, Ryan, just raising taxes 2%. I mean, if you want to have this socialistic mentality, just say taxes are going up 2% across the board in certain tax brackets to cover the people that are uninsured. It's a lot simpler.
Well,
I don't advocate that either, but this is ridiculous the way they've done this. They've created this skewed bureaucratic environment involving the tax code, the IRS, the Supreme Court, and the healthcare isn't any better.
Well, in Canada they have socialized medicine, right? And it's basically where they're taxed a lot more. right? They're taxed a lot more, and it's covered within there. Yeah, why make it so confusing? Well, I know why it's made confusing, because there's all these loopholes that can be put in place to basically help the rich out. But,
But also because the United States, at least recently, is still not a socialist country, and does not favor higher taxes, and that's what they were concerned about. That if they were to put in the health care tax, that it would be rejected out of hand. So they had to say it's not a tax, or won't go up 1 penny, all that kind of nonsense to make people think that it wasn't a tax increase to get it passed. But they would have had a better shot and a better result if they just said, look, we have Social Security, we have corporate welfare, we're basically a socialist country anyway, there's 30 million people that don't have health care, we're going to tax people to give it to them. That would have been the more honest approach.
Yep. Well, we know that honest approaches don't really exist. And that's kind of where we are today. And you know what? The only way that people can actually survive is if they do own a business, they're in a better position because they can ultimately choose to go out there and be more productive. But just imagine if all of a sudden, your healthcare costs go by 400%, rising food costs, energy costs, all these things are going up. So I just took healthcare and threw that in there. But Louis, we didn't even talk about any of the other things that have been going up, right? So when somebody sits down to do their budget at the end of the day, great. The lender tells them that they can qualify for a $300,000 deal, but I guarantee you their net income, the net money they have coming in, it could be going negative by 2015. And it's irrelevant as to what most people can get approved for, because now actually people have to be sensible, and when they're looking at their bank account, they're saying, well, how come I'm negative every month? How come I'm eating into my savings? It's because of these things. And it's easy to turn a blind eye if you're not really, if all you do is just have your checks deposited and you never really, balance your checkbook or look at your bank account to see how much you're spending every month. But I can guarantee you that come 2015, we're going to see more and more people going negative, which is going to then mean what, Louis? More money on credit cards, what?
Yep.
Which will then mean we're going to have this even more debt-based economy, which is not good.
And they'll say spending is higher. People spending money on credit, they'll think that's a sign of a good economy. Oh. And then people borrow more money that they don't have to buy stuff that maybe they don't need.
Well, isn't Janet Yellen talking today, I believe?
8:30.
Okay, so we get to follow up and find out what she has to say. Obviously, she gets to pin her ears back and say, hey, look, initial jobless claims, they came in better than expected. Looks like her employment's moving in the right direction. However, we are a little bit worried about this deflationary environment.
All she has to do is give a signal that the committee is concerned about deflation and quantitative easing and accommodative monetary policy. If she says any of that kind of stuff, that's exactly what the market wants to hear. She doesn't have to say we're going to do QE, we're thinking about it. She just has to give signals that it's no longer on the table. She has to shift the narrative from when they're going to raise rates to when they might do QE.
Yeah, and you know what? Maybe the Federal Reserve, maybe Janet Yellen and her office sent a press release to CNN Money to release this headline at the open that I brought up at the beginning of the show, where it says U.S. markets set to bounce at open. The futures are basically up on the day before she's talked. Do you think that somebody's tipped them off? I bet you have. They need to manipulate markets.
The last pillar of the recovery, so to speak, is the stock market. If the stock market goes, I've written about this months and months ago, it's all over. There's nothing holding up the economy at all other than rising stock prices. Rising home prices aren't doing it anymore. That's gone. It's all on rising stock prices.
Yeah, and
they lose the stock market, they lose.
Yeah, and you would think, and see if this.
And if they lose credibility, they lose, because what Bullard looked like, I call it Comedy Central. He looked like a buffoon. He's out there a week earlier saying everything is fine, and we may raise rates even earlier, to total 180 saying, oh, no. We have to think about not even ending QE. Forget QE4. We need to keep QE3 going.
Right. Well, they've lost credibility for you and I a long time ago, right? I mean, they've lost it, 5 years ago. But for most people, including like CNBC, MSNBC, do you know what? These companies, these media outlets, they'll take and pull what they want. So they'll say, you know what? We realize that he kind of has been flip-flopping back and forth. But, he brings up a good point. We don't want deflation, do we? So, I mean...
And we do want QE, don't we? And doesn't my job depend on pumping stocks on CNBC and having my job because people are tuned in watching the stock price rise?
Absolutely. And then they'll have a ton of their guests on that are all in the same boat as them, and they want to continue to pump the stock market. Then the one guy that comes on that actually speaks his mind and basically talks about why it's bad, he's never invited back again.
No, hey, Ryan, I've given countless examples of the gold hit pieces. CNBC had another one. I'll post it on when we do the transcript of this podcast, where they have two people on about gold, and it's not one for and one against. It's one against and one more against. I mean, they have this mentality that they have to get out there and bash gold and pump stocks 24/7.
Right.
And the Fed, I mentioned this a while back too. The Fed never, ever, ever, ever talks about gold at all.
Right.
It's not even mentioned. And by the way, Ryan, I sent you this morning my latest piece on the Save Our Swiss Gold initiative in Switzerland. I don't know if you've been following that. Maybe that's something we can discuss in a future show. But the Swiss have a ballot initiative, which of course the Swiss National Bank and the Parliament is against, that will require the Swiss National Bank to hold 20% of its reserves in gold, which would mean they couldn't continue to print francs unless they had a corresponding increase in the amount of gold they buy, which would severely restrain their monetary policy. If that passes, that's a big deal because it would require the Swiss to go out and buy 1,500 tons of gold, which would create tremendous demand, and which you would think, of course, maybe it won't, would drive the gold price higher.
Right.
Because, they'd come right back out and they'd be naked short selling left and right as the Swiss are in the market trying to buy 1,500 tons of gold. Anyway, I think it's something to keep an eye on because that puts a kind of monkey wrench into at least Switzerland's central bank's ability to continue to race to debase their currency, because if they want to keep buying euros to keep the peg of the franc to the euro at 1.2, they also have to keep buying gold.
Right. Yeah, I remember it was years ago when they basically came out and said, when they started selling all their gold, they basically said, hey, gold is no longer part of our monetary policy, right?
Right.
And now, lo and behold, hey, maybe this should be part of our monetary policy. Why?
Well, they don't think it should be. I mean, the central bank doesn't, nor does the parliament. The people think it should be. It's a ballot initiative. And, of course, they're being told they're ignoramuses, they're far right, whatever names they can throw at them, because it doesn't fit with their agenda.
Yeah. And, that's we can probably touch, we'll dive deep into that on our next show. We'll talk about, obviously, China boosting their reserves, Russia boosting their reserves.
Right.
There's obviously reasons for them doing this. We'll get into those reasons and, what that ultimately means for us as an economy down the road. So we'll dive deep on that. Where can they go to check out that blog post that you just posted?
Hey, it's up on smallgold.com. If it happens to get pushed down to the bottom as more posts come up, you can just type in Google Save Our Swiss Gold, Small Gold, or Swiss Gold Initiative, Swiss Gold Referendum, Small Gold, and you should be able to get that blog post. It contains all the information about the initiative, and it gives an overview of the Russian and Chinese buying of gold and the potential that this initiative might have on the gold market price.
Yeah, great. I'll check that out today. I appreciate that, Louis. We're coming up on the end of the show. Thank you again for coming on, Louis.
Thanks, Ryan.
We'll be back again next week. In the meantime, make sure you check out on iTunes, download, subscribe, share, Real Estate 360. You can search in the iTunes search bar. You can also stream the show live at realestate360live.com. That's realestate360live.com. On the right-hand side, there's an Ask the Question button for any questions that you have or any topics that you might like us to cover on future episodes. Until next time, take care.